Computer Age Management Services Limited, CAMS, the big player, under constant pressure. Acting as registrar and transfer agent to mutual funds, CAMS earns about two-thirds of its revenue. It has other income streams comprising back-end services to National Pension Scheme, alternative investment funds, fintech companies, and the like. In operation for almost 4 decades with a great reputation, got listed through an offer for sale in 2020. A mid-cap company with a modest market capitalization. Major stakeholders: FPIs, mutual funds, and domestic institutional investors. Unique selling proposition of CAMS is the complex proprietary technology platform developed by the company. As it needs a massive investment in infrastructure development, the technology acts as a strong entry barrier for any new entrant. In the business segment of mutual funds, it is a duopoly with the market share of CAMS placed at almost 68%. The other major player is KFin Technologies. During the 4 quarters ending September 2024, the assets under management from the mutual fund segment went up by an impressive 37.8%. And during the recent 12 months ending September 25, the growth has been 16.3%, which is quite reassuring considering the size of a bigger base. On a 5-year timeline, a minimum compounded growth rate of 15% plus in every performance indicator of revenue, EBITDA, profit after tax, and net worth is a position of great strength and stability, more so across the key performance indicators on a very consistent basis. A return on equity averaging well above 40% over last 6 years is a reflection of exceptional efficiency in financial deployment. Return on capital employed in excess of 50% and a debt-free status is an added advantage to CAMS. Net profit being overtaken by net operational surplus, resulting in a percentage above 100 year after year over a period of 6 years, is quite reassuring on the exceptional quality of accounting profits contributing to enhanced liquidity. But the concern is a decline in the percentage over years in the descending channel, suggesting blockade of funds in working capital changes. It is a red flag. Besides funding its non-current assets in full, equity is funding a substantial portion of current assets, and in effect, about 61% of total assets is funded by equity in FY21. The percentage is moving up year after year and averaging around 70% of total assets, suggesting the financial strength of the company. And this highlights huge opportunity for fundraising for both organic and inorganic growth in the background of debt-free status. Quarterly growth rate of revenue for the last 4 quarters have been a disappointment, as quarter after quarter the growth has been sliding, moving to a single digit growth for the latest 2 quarters and the minimal growth reported in the quarter of September. As a result, revenue for all the 4 quarters is stagnating, and on a TTM basis, revenue growth is less than half of what it was for the September TTM, falling from 26% to 12.3%. That is a bit worrisome. Quarterly volumes of EBITDA has reported nominal growth rates in March quarter, but the growth rate has fallen significantly, even reaching negative growth in the latest quarter. And the fall is quite evident in the EBITDA percentage for the quarter, and the EBITDA rate reached the lowest in June quarter, and the three EBITDA rates were reflecting a status 2 years before, and that is the level of strain that is quite evident in the margins of the company. Peculiar for the shareholding pattern, no promoter group, DIIs holding 7%, MFs have raised their stake by 2%, but substantial fall in the holding of FPIs over last 4 quarters, which has set the price fall in motion in respect of CAMS shares. The pattern of holding indicates buildup of stake from December 2022 to December 2024. Similarly, divestment has happened from December 2024 onwards till date. Surprisingly, this movement in the stock holding has been directly reflected in the market price, indicating the hold of FPIs on the price of CAMS in the market. From the daily chart from January 2023 till December 2024 mid, there is a buildup of stock acquired by FPIs with a corresponding increase in the share price, taking it to the peak of 5367 on 12th December 2024, indicating grip of FPIs on the share price of CAMS. What followed after peak of mid-December was an anticlimax, a collapse of sorts, as the FPIs exited. The downward pressure on the share price was quite evident when over the 12 weeks following mid-December, the share lost almost 45% of its peak price, losing over rupees 2,300 per share. The price has been sideways for over 8 months now, as FPIs have continued to sell off, as evident from the stake falling to 47% as at the end of September. Prior to December 2024, while the FPIs were raising the stake, the price multiples got pushed to an unimaginable level, both in terms of earning per share and on book value. When this realization dawned on the FPIs, the massive sale ensued. The PE multiples have since moved to a saner zone, but with the quarterly performance for Q2 being not up to expectations, the market continues its sideways journey. Market leadership: diversifying into non-mutual fund segments. Mutual funds have to be with the RTA, as switching can be disruptive, and that is the MOAT. Proprietary technology for seamless operations. Strong financial fundamentals. Government reforms, including GST rationalization, a big positive. Trade tensions with the US nearing settlement, likely to restore investor confidence. Close monitor of MFs by SEBI to lower cost to investors. The regulations directly affect CAMS with the impact of regulatory uncertainty. Big mutual funds extract highly competitive price, causing margin pressure and resulting contraction. Hope you found this presentation on CAMS to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You can access videos of similar quality at our info card. We look forward to your positive response and timely support. If you are not a subscriber already, may kindly subscribe. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.